Hello, everyone. Joe Tucker from Oz Property Investors. It's all about this deal crunch calculator. You can see it up here. I think you can see it up here. But for the people that don't know who we are, this is a community started by myself, Joe Tucker, and Jeff Miles, this absolute legend here. We created this community because we never shut up about property, right? But what happened is we started to chat to people in the investing world, and we're like, well, why aren't we just recording these things? Why don't we just have a conversation with an absolute legend in the industry? And secretly, we thought, well, if we have a community, we can speak to cooler people that we wouldn't get access to. So it's a little bit of a, so this is our group. It's not about us. It's not about us. It's about the awesome people that are in here. So we've got people with over $20 million worth of property. We had Chris Gray on here. We've got expert buyers agents within here, not all the spooky, dodgy ones. We avoid all the sharks. And then we've got data analysts like Kent Lardner. We're looking to just educate people on property. There's no sharks. There's no bull crap. No one's allowed to spruik their business. It's purely about helping people out. So if you're new to the community, pop a comment in here, right? Say something, ask questions. Nothing is too silly. But that's a bit of an introduction. So this video is all about introducing you guys to the Deal Crunch Calculator. What is it? What is the Deal Crunch Calculator? So myself, Jeff, we all have multi-million-dollar property portfolios, which sounds really weenery when I say it. But we invest in property. We buy properties. Jeff, I'm more on the renovation side of things. Jeff is really good in the development space. So what I wanted to really do is quickly go through how I crunch a deal with a spreadsheet that I made. Now, I've promised a couple of things. Let me just look over here to what I promised. I promised an equity release calculator. Now, that is super useful to be able to tell when you can actually reuse your equity. What else? Growth since last sold. Very important. You need to know when the property last sold and the 5 metrics that matter. These are the 5 metrics that I believe are actually valuable in the property transaction. So you'll be able to understand what they are. Now, it's not a deep dive into these 5 metrics that matter. No, it's not about that. It is teaching you about this spreadsheet. So I'm going to dive straight in because there is a whole heap to cover, but it's not really that much. But it's going to be, if you make it to the end of this, you're going to have access to a calculator that is going to be well worth it. So I think I'm posting this on YouTube. So drop your, it's in the comments or wherever YouTube puts its thing. I don't know. I'm more property than YouTube. So we're going to need an example. Let's go through it. Go through an example. This is a property that I was talking about in a place called, I was going to say Fern Gully, California Gully, $320,000 to $350,000. So it's a nice little place, doesn't need a renovation. So it might be a nice little buy and hold for somebody in a great location called, in Bendigo. So let's have a look. It's $320. So that stood out to me as a bit of a bargain. So let's check out the property. Here it is here. Great. Let's pop this in the calculator. Now, I already did a video about this deal, so I'm not going to continue doing that deal. So I'm just going to use it as a base. So the property was $320,000. I think the agent is putting the price up a little bit. So let's just say it's going to go for $330,000. Okay. This is our calculator here. So now this doesn't need a renovation, so it's not going to have any uplift. Do I think I could get it under market value? Maybe I can. So what is my deposit? So all the yellow fields are editable. New South Wales, you can see that the stamp duty changes. South Australia, expensive stamp duty. Queensland, a little bit more affordable, but we're in Victoria here in Bendigo, of course, the most expensive. All the yellow is what you edit here, and let's do it. So on this one, I have $10,000. I have 10% deposit, which means I'm going to need to pay LMI. So I haven't made an LMI calculator. I don't even want to go near that. There's a calculator here. You just copy and paste this and you can get a calculator. So I've factored it in to be about $4,077. So this number is capitalized into the loan. So you don't pay that up front. It's capitalized into the loan. Are you using a buyer's agent? If you are, throw in another $10,000, $12,000. Pest and building, estimated legals, other purchasing costs, things come up, right? Now, am I going to improve this property? No, I'm not going to improve it. I might need, $3,000 for a lick of paint. Cool. let's have a look here. This is the core metrics that matter. This is our cash down. So how much money am I physically taking out of my pocket? So watch this number when I put in 20%. I'm putting in 20%, which drops my funded, which is bank money, right? But it increases my cash down. So if I only have $55,000, I can actually purchase this property because I have a 10% mortgage, a 10% deposit, and it is paying LMI. So these are the things you need to factor out, right? If you want to avoid LMI, is it worth waiting until you have $90,000? Or is it actually worth paying LMI, taking the hit now? But as you'll see further down in this little tutorial, that the growth is very important. So if you're in an area that's growing really well, let's save our cash and do all of that. Okay, so here, this is the yellow. This is the potential growth for the area. Now, what do we know about this property, right? Let's have a look. So I'm just going to say, and I'm totally making this number up, let's just say it is a 7% growth over the next year, next 5 years. Figure that number out because it drastically changes things. So if it's at 4%, you'll see that it drops quite a lot. I'm going to say 7 because I have a bit of faith in the area. Now, this is the loan calculator. Are you going interest only? Are you going to principal and interest? This is big because it really determines your cash flow. So if you look over here, I've got $1,700 in cash flow, but that's because I'm on interest only, not paying any principal and interest. Click onto that, drastically changes things. So this is why cash flow is so important. Now, remember, interest only is only on for a number of years. So let's just play the scenario though, right? You got to choose the interest rate that you're at. Maybe that's a little bit expensive for right now. So let's change it to 3.2 and it's on a 30-year term. Usually with loans, it can be 25 or 30 years. Now, this is the little trick, guys. This is the growth since last sold. This is what I've promised you. I have not seen it anywhere on the internet. And believe me, I'm on the internet. So this is how you find the growth since last sold. Type in the property's address and type in sold. This is a little backdoor to realestate.com.au, and it will show you. So you can see the normal listing here. It looks pretty similar, but it doesn't tell me what the property last sold for. So go type in Google, go into sold, and you'll see in 2018 this property sold for $185,000. Now that is now on the market for $320,000. So that is a massive jump up. So I've already put it down in here for January. That is 16.2%. Oh my gosh. So let's put that in, 16.2%. Now, I'm going to have people screaming at me right now because they're like, 16.2%, that's crazy. And it absolutely is. So I'm not going to do it. So let's have a look at when it sold previously before that. Where did I go? Over here. Cool. 2014. So 4 years and it grew only that's $25,000. So let's do that. July 2014. Click onto here, edit. It's yellow. So this is where you can edit 2014, 01, 11, 07. Okay, great. So July, it has grown 7.4%. Look at that, 7%. That's what I said. That's over however many years up until now it is. So another cute little thing, you just enter in the address here. So 12 Truscott Ave, California. Great. And then it turns into here, which is great. And then the agent, you've got the agent there as well. Anyway, I feel like I'm rambling a little bit, so apologies. Now, what have we got so far? So we've got how much cash we're out, right? Our $54,000. How much the bank is going to lend us, which is $301,000. So the total, this property is worth $330,000, but I'm actually putting in $355,500. So think about that. Equity, the funded versus purchase price, we have $28,000. Now let's go to the real numbers. Expenses. Now, for all you little data nerds out there, because I am one of them, I've automated these expenses. So you can see there's no yellow. If you're not into crunching these numbers too much, don't edit these. I have the assumptions here that you can read through if you really, really want to. But essentially, I'm running a management cost of 8%. Purchase costs I've not actually included in this spreadsheet, but you can. I've automated it through the stamp duty. Occupancy rate is 4 weeks. So I don't base my numbers on what I would love to have. I base it on the real world because that's where I live. And holding costs are 1.5% spread out through these like this. Okay. So number nerds, everyone else don't bother because who cares? You should care. But you want to do deals quickly. Like I'm looking at one property. You've got to look at 100 properties to find a good one. Anyway, so that's that. So our estimated repayments with an interest-only loan will be $15,658. And you're saying, Joe, what about the rent? What about our income? Well, our income on 310, let's say we believe we can get 350. Boom. What about best case scenario, 370? Okay, now we're looking pretty good here, guys. Now we're looking pretty good. So we have got a positive cash flow of $988 annually. So this property is putting money in my pocket. I love that. So that is the first part of the spreadsheet. Now, let me cover off the 5 metrics that matter. Where are my fingers? There. Whew, we're getting there, guys. We're getting there. Apologies if I'm rambling. Okay, cool. Gross rental yield. What is the gross rental yield? I'm not going to cover it off too much, but pretty much it's the rent over the purchase price. Now you can see here that I've times it by 52 because that is just competing. This metric really just compares apples with apples. Cash on cash return. This is the cash that you get back for the cash that you put down. So you want this number to be high. However, if it's a negative number, like when we go principal and interest, people are like, oh no, it's negatively cash flow. It's not a deal that's worth exploring for me. Well, this is where the next metric that really helps out. This is our generic growth on cash down. So this is the growth figure here that we're capitalizing, right? $23,000. So let's go back to interest only because it's a bit better. Actually, no, this illustrates the point better with principal and interest. We're losing $6,897, but you're making $23,100 in equity. So your cash on cash return is negative 12%, but your generic growth is 42%. So that then balances out to be your net profit percentage. So what these numbers mean, right? It's percent. So every $100 that you put in, you get $5.5. Okay, that's the yield. That's not that. Don't ignore that. Every $100 that you put in on the cash on cash return, you get back negative. It takes money from you. $12.70 it costs you every time you put $100 in. But for the growth, it is 42%, right? So you are growing 42%. So every $100 that you put in, you're getting 42% worth of growth. You're getting $42. My gosh, that's sensational. And then the net profit percentage is, well, these two numbers factored in. So you can see here it's 29.77, which is 30%. If it's a positive number, that number is going to be higher and it's going to be $44. So this means every time you put $100 in, you're getting $100, you're keeping $100 and you're getting an extra $44. Boom. Okay. This is the value and the power of leverage. Whew. What else have I promised you guys? Potential equity release. Now, this is super valuable, super, super, super valuable. I'm going to go back to my deal that I did not too long ago. Gosh, I've been going for 14 minutes. I feel like I've been doing a lot. If you're enjoying this, I don't know, pop a comment, say this is awesome in there, and I don't know. Okay, so I purchased a property for $280,000. Actually, I didn't. I purchased it for $310,000. But another zero? No, 31,000. Do I need another zero? What am I doing? 3.10 million. That would be amazing. 3 done. Okay, so now, what did I think that I could get this property up to? Now, I don't remember what my number was, but I remember the number when I got it revalued, which was $369,000. Boom. This is where Now, actually, before I do that, now when I said, hey, I'm going to pay $310,000, but I had a clause in the contract to say a pest and building inspection to understand the damage that was done because it needed a lot of work. So I'm like, look, I'm buying this based on right now's figures and information, but I will get a discount. Just letting you know, right? I'm going to do a pest and building and I'm going to find out how much it's going to cost to fix all this stuff. So I got a discount of whatever it took it to. I think it was 30,000. It should take it to 280,000. Yes, that's how you get to 280,000. So I purchased it for 280,000. Now, let's do, this is what's going to happen to the fifth metric. So 369, 1, 2, 3. Boom. Here is where it gets bloody interesting. Every $100 for the first year, okay, so it's not ongoing, for the first year, I'm going to get $389. This is why I love property, right? Because I'm getting $389 back for the $100 that I'm putting in. Like, that is the value of property. That is why I'm so crazy. I definitely didn't put that amount of money. Where are we going with this cash down figure? Because I haven't renovated it. Now, I spent $30,000 on renovation. Okay, so it was around that 52. So I think I spent 52. So let's just jump this up. Let's just get to my 52 number, 4,800. It might have been a more expensive rent. No, it wasn't. It was under 30. Anyway, let's have a look at my property. Now, it was $300 rent, so I had a negative net figure on the rental. Oh, there it is there. Now, see, this is why it's so important to crunch these numbers, because after reno, it is worth $369,000, which is every $100 that I put in, I get $154 back. Now, if there was an ATM around the corner that would allow you to do that, would you do it? You probably would. So that is why I love property. Now, if I look at when it was revalued, 420, 1, 2, 3. It is worth, I then have, after the first 18 months, I would have had 252% growth. So you can see here, I now have some potential usable equity in my property. So I can actually withdraw those funds out of my property and get them back. I've got my deposit back, right? That's 52,000. Oh, look at that. It is. So I now have my deposit back. So I can go to the banks and refinance this property, let it sit here by itself. It's going to cost me $350 a year, which is $29 a month. I think I can afford that. But I get my deposit back. Is this not the craziest thing? Now, all these numbers are factored in for you. Now, you can see here it's got body corporate. I'm very much on the let's just err on the safe side. So I fattened these numbers up a little bit. So if there is a body corporate, you can include that figure in there as well. Once the figures start to get above $1 million, you need to start tweaking it yourself. But for the lower value properties, you can do that. Now, if you're not a member of Oz Property Investors, jump onto here. You can be a member. It's awesome. It's free. It doesn't cost anything. You get these cool spreadsheets. I realize it's gone for 18 minutes, so I apologize, guys, for rabbiting on. But thank you very much for being a part of this community. It's awesome to have you. We are learning so much with all these experts that we get on. I hope you're getting value out of it. If you are, great, good. We just saved another person from a property shark. Like, it's just awesome. So thank you very much. Have a great day. And if you need anything, jump on the little thing and then click Joe and say hello, and click Jeff and say Jeff. There's an awesome admin on the back end of this as well, Nicholas. Nick, he's awesome as well. So super helpful. Post in a comment. If you want to post an anonymous comment, no one will know who you are. You can do that as well. Sometimes it's a bit uncomfortable. I get it. You don't want to talk about money. Don't talk about money in public. Great. But you still need the answer. So I'm rambling. Thank you very much. Have a great evening or morning or afternoon. But this is, actually, I didn't even talk about our newsletter. This is in our newsletter. So you're getting this because you're in our newsletter. So we have a property newsletter. Enter your email in there and you get access to this. It's once a month and it is a breakdown of all the lives that we do. So you can see here, we create these awesome posters. Thank you, Chris. You're a legend. And we can go through a breakdown of the top bits that we believe are awesome in here. And then we've got deal breakdowns. We've got property tools. Like, we just love property. So that's why we do it. And if you guys have any questions, happy to answer anything. But thank you very much. Have a great day.